Hi, I'm Frank from Galileo Capital. In today's video, we're going to look at offshore investing for retirees. Is it actually worth it? Many South African retirees feel that they have to invest offshore to be safe. But offshore investing isn't automatically the right thing to do, especially in retirement. Today, let's look at where offshore investing helps and when it actually creates new risks. Please remember that this video is for educational and informational purposes only. This is not to be considered financial advice. At Galileo Capital, we've helped thousands of clients to retire with peace of mind, and we've looked at all of their unique situations to decide whether offshore investing makes sense or not. It's very important to remember that offshore investing is a tool, not a solution. We've seen far too many retirees investing offshore out of fear. Offshore investing is not about panic. It's about diversification. It's about global exposure. It's about protecting your long-term purchasing power. It shouldn't be a decision you make based on fear. Some of the most common reasons that we see retirees wanting to invest offshore include the fear of missing out, or wanting to take money offshore after bad news when the rand has already weakened. Remember, bad news sells newspapers, but it also sells financial products. And so many people will encourage you to invest offshore off the back of bad news. These fears are understandable, but they shouldn't drive your offshore investing strategy alone. Let's have a look at this graph. This is the long-term exchange rate between the US dollar and the rand. Now, there are a few significant places on this graph where the rand weakens very quickly against the dollar. The first one happens in 2008-2009 with the great financial crisis. But in 2016, you might remember Nenegate, where Jacob Zuma fired Nene in favor of David van Rooyen. At that stage, the rand went to 16.28. And then in 2020, we had COVID, which again sent the rand weakening. But look closely. The rand has strengthened more recently. If you had rushed to take money out in 2016, 10 years later, the rand is now 15.90 at the recording of this video, which means you took money out 10 years ago and the rand dollar exchange rate is at exactly the same level 10 years later. But what are the real benefits of investing offshore? Well, these are currency diversification, access to global markets, broader asset class exposure, inflation protection over the long term, and reduced South Africa concentration risk. But there are hidden risks to investing offshore that retirees don't think about. For example, currency risks work both ways. If you're investing offshore and drawing your income from offshore, a stronger rand can reduce your income. Offshore income can become very unpredictable. Offshore assets are usually very growth-focused, not income-focused. For example, yields on global bonds or cash are significantly lower than in South Africa. And so offshore investments are not ideal for your monthly income needs. There are also access risks, like liquidity timing. How quickly can you access your investments? What about the admin between exchange controls or the delays in transfers from offshore? And finally, platform complexity. It's very difficult to invest in an offshore platform. And don't forget the emotional risks. Imagine watching your income fluctuate based on the rand-dollar exchange rate and all of the anxiety that creates. Here's the key trade-off. You're trading off offshore investing and income stability. Retirement is all about a stable, predictable income. It's about cash flow reliability. It's not about maximizing your long-term growth. Ask yourself, Does this offshore investment improve my monthly income stability? If not, it's time to rethink the structure. But when does offshore investing make sense for retirees? Well, it makes sense as a diversification layer, but not a core income source. It makes sense for long-term legacy planning. So if you're planning to leave money to your heirs and you don't need this as income. It's really good for tax-free investment exposure and good for discretionary capital. Again, not for capital that you need to draw an income from. When does offshore investment not make sense? We don't think it makes sense when your offshore investment is your main income source, or when you're investing offshore driven by fear, or when currency timing becomes the strategy. We don't think offshore investing makes sense when your income needs are immediate. Retirees need predictability. Having the majority of your income based offshore doesn't make sense for retirees. At Galileo Capital, we use the simple rule of thumb. We use local assets for income, and we use offshore assets for diversification and long-term protection. This doesn't mean you won't have any offshore exposure in your local investments. Many balanced funds already have around 45% offshore exposure. And when you take the Rand hedge shares into account, that goes up to as much as 60%. But the ride is much smoother than when you're drawing your income from offshore. If you enjoyed this video, like and subscribe for more content. Remember, we also have a monthly newsletter you can subscribe to get our latest thinking. The link to that will be in the description. If you have any questions, please comment in the comment section below. We won't be able to answer all of your questions, but we'll try and get to them in future videos. And finally, if you're looking for a global balanced fund, have a look at our website. We have a fund where we look at all of the investment options offshore and put them together in one fund for you. Thank you for watching. We'll see you next time.